Okay, guys. Good morning because it's morning by my side, and I really want to share. Let me share my screen. Let me share my screen so you guys can see. Okay. So good morning, guys, once again. So the last discussion we had was I really talked on candlestick patterns, and I believe you guys understand the last class. So today's class will be on the combination of candlestick pattern, trend, market direction, trend line, and support and resistance. So if you remember the last time I taught you, I was saying something like you want to draw. Sorry, let me just do this very. Let me do it very well so that you guys can have see. Um, so let me put it up so that you guys can see very well. So if you guys can see this, if you guys can see this, then fine. So notice this was what I call a uptrend, and I said you draw a trend line from the what? From the troughs. You connect it, through and through. So like this. So for a downtrend, we have something like this. For a downtrend, we have something like this. The market is coming down a little bit to the upside and down, then a little bit to the upside again, then down. So and I said something. I said for you to draw a trend on this type of trend, you have to connect from the what? From the peak, which is the head, which is this one. So I believe you guys are not new to this again. So having gotten that, we can now have okay, this is now our trend. This is what I taught you about trend, and I taught you something about support and resistance, in which I said something like this. If we have a market this way, and we have something like this, maybe something like this, automatically, this one I'm touching now has turned to a what? A resistance level, a support level, and coming up here, this has turned to what? A resistance level. If the market breaks this part by moving up, then coming back to touch this guy, this has turned to what? A support level, and we're having a what? A new resistance level, which is this guy here. So you'll get that. So I haven't gotten that. So let's do something now. So if you don't get what I just explained, please go back to the previous video and see them. I believe you understand better. So let's go. If we have something like this, all of you, we agree with me that this is an uptrend. This is an uptrend. You all agree with me that this is an uptrend. So how do we draw our trend line? We draw our trend line like this. Like this, right? So we are expecting what? Maybe later in the future, the market should come back to this guy here later in the future, right? So good. So how do we draw support and resistance in this area? Believe me, this market is coming from a place which is here. It's coming from this place. Let me use. This market is coming from here. The market is coming from there. The market moved to this side. Then to this side. Then to this side. Creating a higher high and a higher low. Then to this side. then to this side. This is a trend line. You all agree with me that this is a trend line. Sorry. You will all agree with me that this is a trend line. So how do we add our support and resistance to this trend line? So see, this point, the market moved from this point to this point, created something like a resistance here, which does not allow this market to go up. And let's draw it out. Can you see now? This is a point of resistance, and the market moved up, creating another form of resistance again here, while the market bounced down to this area of resistance and turned our resistance to support and bounced up again. After breaking this resistance here, it turned this resistance to support, in which later in the future we'll be expecting market to bounce into this support for an uptrend and go up, breaking this resistance here and turning it to support again. It's as simple as that for an uptrend. Please, if you don't get it, replay what I just said, and I believe it is well explanatory and simple. That's for an uptrend. Let's do for a downtrend before I take you into the chart. So we have a trend like this. The market is coming down, read up and down, up, then down, up, then down. Okay, let's do history. So I believe this is okay. I think now we're needing something that is a little bit perfect, so for me to avoid mistakes. So okay, so how to draw our trend line? We draw it into the future, and we draw it into the future. So let's have our future here. So let's adjust our trend line. Beautiful. 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 So here you will all agree with me that the market is moving from this side here, it's from this side here to this side, then from that side to this side, then from this side to this side, then from that side to this side, then from this side, so to this side. Yes, so we can see that the market is moving from that side to this side, then the market let out fall. So now, how do we find out? This is a typical downtrend. So in this typical downtrend, we also find our support and resistance. And please don't forget the law. The law is just this. This is a trend. Once we have market coming to this side, this place has already turned to what? A resistance. And if the market come back to this side, turn to a support. If the market break this high, that's a resistance has turned to support. When I come back, support, you understand? Break it again. So as the market keep breaking, it's turning things to support and turning things to resistance. So here for a downtrend, if the market, okay, so now let's do this. So if the market break this support, this thing that's supposed to serve as support, it turns to what? Resistance. And the market just touch it again, it turns to what? Resistance. Then break the support turns to what? Resistance. So that is how it will keep going, turns to resistance again, then touch this guy again, which is our support, and the market bounced up again. And the market bounced up again, turn this support, previous support to resistance, then break it again, turn that support now to resistance by bound like that. So that's the same scenario that we're going to apply here. So now this area now here has turned to what? This previous support after the market broke it through has turned to what? Resistance. So this previous support that is here has turned to what? Has turned to support. This one is now resistance. The market broke it through. This support now has turned to what? Resistance, because the market will bounce off it and keep going down. So that is the simple logic concerning support and resistance in a trend. So let's go to our chart and let me just give you some typical example of what I mean by that on a chart. So everyone will agree with me that this is a typical, sorry now. Okay, thank you. Everyone, if you zoom out now, zoom out your chart, you have something of this style. So this is a typical, everybody can agree with me that this is a typical downtrend, right? This is a very typical downtrend because the market is pulling down. So this is a typical downtrend, and so we can draw different type of lines to indicate our resistance and our trend line now. So the first one I can see here is this one, even though it is invalid, but I really need it to explain. So this is it here. So before we later add the one we have in here, which is from this point now to this point. So yes, it is possible for you to have trends like this on your chart, multiple trends on the same chart. Yes, it is possible. So you just keep, refining for the best. So the most recent one, which is here, yeah, this is the most recent one, which is here. Okay. So let's deal with this one first. So let's see the schematics that happen here. The schematics that happen here. So we can all see, actually, the issue of support and resistance is that they are not usually visible, but if you can note them, oh my father, you are very, very good to go. So we can all see, one thing we have to do is mark out our market structure. That's the first thing to do. Mark out our market structure. And how do you mark out your market structure? This is the bearish movement in this market. This is the retracement. This is the bearish movement. This is the retracement. Then we have a bearish movement. So let's just stop here for now. So notice what I was talking about. This is the bearish movement here. So automatically, this is our what? This should be our this side should be our resistance in the market. Then this should be our support, because the market bounced down from this side, touched this side, and bounced up again. So see what happened. So let's draw it out. So this support, because this is a what? Because this is a downtrend, it turns to what? It turns to resistance here. So the market came in, bounced up, broke it through. The market comes to retest that line. Then the market did what? The market bounced off. Do you get that? Same scenario here. This is a what? This has now turned to what? Has now turned to support for us. I mean, this guy now has now turned to support for us, right? So let's draw our support out. You see, later in the future, it will become resistance. This is what happened. The market didn't even touch it. It came close to it and it did what? It bounced down. Do you understand? So this, you can see from this side now, this is a typical downtrend. To this side, from this side to this side, then from that side of the chart to this side, then from that side to this side again. Let me draw it out again. So can you see this point here? This point here, see what happened? Here. Can you see it? This is what they call typical technical analysis. So this is my what? My resistance. So what will I do? I will mark out this position here. Later in the future, you guys can wait for this. I mean, probably if it happens before I end my class, I will show you. Because anything can happen in the market. So as you can see this is a what? This is another support in which has turned to resistance now. I'm just expecting market to come into that area and I trade them. Can you see the way I mark them out? This is a typical downtrend. This is a what? This is a higher high, a lower low, a lower 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 high, a lower low. So in those lower high, I'm already having my trends in there. You understand? So that is how, this is what they call analyzing market structure. Once you get out to analyze this market structure, then you go to go. So this is a typical what? A typical up. Let's find a typical uptrend, and that's everything we're looking for. Typical uptrend. Okay. Again, the service here is kind of bad. Sorry. I don't really have a good service. So let me see if I can just run something. Okay. I think let me just zoom on. Let me zoom this out and let me use this one for the example. Yeah. So you will all agree with me that this schematics here is an uptrend, right? It's an uptrend. This is an uptrend. So haven't we find out that is an uptrend? How do we draw our trend line? So you all agree with me that we'll be having something like this here. We should be having something like this here, right? So let's find out our market structure. So what's our market structure? Our market structure is this. The market move from this side to this side, from this to this side, yes, from this side to this side, 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 and up it goes, then down it comes, then. So let's analyze this area alone. You can all see this thing. So this market serves as this is our lower high, our lower low, yeah. This is our lower high. This is our lower low. This is our higher low. This is our higher low, and we have a higher low here. So let's do this now. So at this point here, we have a what? A higher high here. Higher high here. At this point, we have a what? A higher high here. We have a higher high around the side here now. We have it here. So can you see what happened here? This guy turned to what? This is a resistance. Once the market broke through it, it became support. And once the market comes back to it, it becomes what? Once the market broke it, it becomes support. When I came back to it, it becomes support. And giving us this area as a what? As a resistance. Can you see what happened there? Can you see? Market played out to that level. Market played out to that level and it shoot up. So this is how support and resistance are found in a trend line. So after we draw in our trend line, we try and find out our support and resistance. So once we can get our support and resistance, then look using what I taught you yesterday, which was the candlestick pattern. In which I told you we have many type of candlestick pattern. We have our pin bar, we have our tweezer, we have our engulfing, we have our what's it called, Amani. We have a lot like that. So we can find those patterns on that. So if you want to take a trade now, you will see even this side here, was even a support. You guys can see that. So that is how we trade. So we can find our candlestick pattern within those supports on our trend line. So this is an uptrend. So we find candlestick pattern on this support, on this. These are trend. So we find our trend line, our candlestick pattern around this area to take our position, around this area to take our position, around this area to take our position. Do you get it? So after seeing a trend like this, the first touch, second touch, coming to the third touch, knowing that the former resistance will turn to support, market touching the support, wait for your confirmation candles. Here at this point, what I have as my confirmation candle is number one, I'm seeing a candlestick pattern. I'm seeing a lose in momentum. You can see this indecision candle, this dragonfly doji that is here. I taught it in the last class, and make sure you see that previous video. So you can see that candlestick pattern that is there. So showing us that the sellers are losing their momentum and buyers want to come into this market. And lo and behold, see what happened. On touching the trend line, the market bounced up and start moving aggressively towards the upside. So that is how we do that. So it keep repeating itself. And on this typical, let me look for it now. Sorry. Wow. Okay. On these, so inside this chart, I still have my support and resistance. So let me delete something and you can draw it. You can make it macro or you can make it macro. Let me explain to you what I mean by macro. Automatically, you all agree with me that this is a typical uptrend. This is a typical uptrend, right? So inside this uptrend, let me find my support and resistance for you guys to see, so you guys can know what exactly I'm talking about. So number one, the first thing you have to do is know your market structure. Very, very important and very crucial in the market. Know your market structure. So we have this first. We have this up-run movement, right? A downward movement, an upward movement to this side, a downward movement. Though we have some little bit of upward movement, then a downward movement. So let's see. So in this movement, there are something we call macro moves. Micro moves actually. See, the market moved from this point to this point. The market created a high here. The market bounced down, created a high, bounced down, created another high, bounced down. Then we have the move again, bounce up, bounce down, bounce up, bounce down, bounce up, bounce down, bounce up. And these are actually for those that are going to pay for the mentorship. This is an in-depth of market structure. In-depth of market structure. But I'll try my possible best to explain so that you guys can at least start making something to your pocket. So notice here, we're having different type of resistance here, which is we're having this one here, right? You guys can see it. See, it was this resistance here that this market peaks, because this was a resistance before. The market broke through it, broke down through it, broke through it, and the market later used it as a major what? As a major support and resistance line. And the market actually did what? Make use of it. So getting that, now I haven't seen this first movement. Automatically within myself, I know that this market will be making use mostly of the micro what? Support and resistance. So see the support and resistance here. See what you have here. We have it here. The market broke through it and the market came back into it again. Do you get it? Though they don't really make use of this huge move. Though they can make use of this huge move later in future, because if you draw it out, you can see that they're having very, very huge significance. See what happened here. See what happened here. So see what happened here. This resistance here was what on to support here. Can you see it? They are later having huge move in the market. See this one here. This one here now. See this one here. This huge move here. It later had an effect here. So they are having their implications in the market. Please Make sure you check this video, you see it more and more, because these are the basics. These are the things we'll be using in trading. This is a typical downtrend. So if I want to draw my trend line, I will have this here from this point. I'll draw it down to this point, then down to this point. So I haven't been getting that. So I'm expecting a tortoise. But as I'm expecting a tortoise, I'm also expecting I'll be having different type of trend line on this chart because I'm a trend line trader, and this guy will be here. Yeah, so it was broken, so it wasn't. So, well, let's just look at the schematics that happened around that trend line. Let's just see what happened. So we noticed this point was the area of what? Of support, in which turned to resistance for a downtrend. So let's see again. This one wasn't make use of, so let's just leave it there. So at least you see they will make use of 70% of what of support and resistance they have. See, can you see it? It bounced down, and we can all see they didn't make use of this one, though they make use of it a little bit. They didn't make use of this one, but even though they use it a little bit, but it wasn't significant. So, but they make use of this later in the future. So, can you see it? Can you see what happened here? In fact, it was three touches, three good touches. So, can you see what happened? Can you see what happened? So, this is how support and resistance are found in what? In trend line. So, make sure the first thing now is you learn how to draw a trend line, correct trend line, I mean. Then you learn market structure into two, market structure. So after getting the market structure, the higher low, the lower low, connect the high to the low. So just see this video again and again, and try and practicalize whatever you found on this video. I believe by tomorrow, because now we're out of time, I will be uploading more videos for you guys to see. So believe me, by Sunday I'll be deleting all those videos. So please make sure you download or you see them yourself, because they will really help you. So by tomorrow, by the God's grace, by tomorrow I should talk on the reason why I use psychological level instead of support and resistance. Though I use support and resistance, but I found out a deep secret about psychological level, in which I will be exposing you guys to maybe tomorrow. I'll just give you the theoretical aspect tomorrow, and I will just show you some things tomorrow. So that's what we'll be doing for tomorrow. So psychological level is just like support and resistance, but in a more advanced form. So these are the things I use in confluencing my trades. Okay, guys. So I believe it is well explanatory. So I will see you guys tomorrow, and you guys should have a very wonderful time trading the market. Okay, sorry. Yes. Okay, guys. Have a wonderful time.